Well, what's up, guys? Welcome back to the Real Take Podcast, where we share our take on all things real estate. We got some things to talk about. We got to talk about what's going on with these deportations and how they're affecting the housing market, what's going on with rates, people telling people they should wait to buy a house until a specific month this year, and also what's going on with new home construction, how it's being affected by the current state of the economy. So, what's up, fellas? What's today? Thursday? Happy Thursday.
Thursday.
Thursday. Well,
Happy
when they see this,
Thursday.
it'll probably be Friday. So,
Dang.
What's up, boys?
What's up, man? Yeah, it's always good to have this podcast on whatever day we're doing it now. Random.
Right.
It's partially my fault because my schedule's screwed up, but
I'm glad you're
thank
owning
you
up to
guys.
this.
Yeah.
I'm so glad.
Happy to accommodate, brother.
Yeah, thank you guys. No, seriously.
Yeah.
But yeah, always good to be on this pod with you guys. It's always good to be the small fish. So appreciate you guys.
The small fish.
Yeah.
We just see them in the middle so we can keep an eye on them. Well,
I'm
let's
the
talk
senior
about what's
citizen
going
here.
on with some of the stuff that we have here. Susie Orman says, if I were buying real estate right now, I'd wait till September. She says she advises waiting until September to buy a home due to high mortgage rates, which are averaging about 7.03 for a 30-year fixed, and economic uncertainty. Rates are tied to 10-year treasury yields, expecting to remain high, and says waiting might secure lower rates, reducing borrowing costs. However, good deals might still justify buying now. So, Nathan, I know you have some things on this that you wanted to share and some thoughts. So talk to me, man. What's on your mind with this?
Yeah, I mean, her single point of reference in this article is that homeowners or potential homeowners and buyers should wait until the market shifts and interest rates come down a little bit lower before they enter the marketplace. Now, there are some pros
Can I
and
cut
cons
you
of
off
that.
real quick?
Sure.
Can you help? And I should have teed this up better. That's my fault. Can you tell me who this is? Who is Susie Orman? Because I did not know, honestly. I did not know who this was until you shared this article with me. So I do not know who this is.
Susie Orman is a personal finance expert that is I would say the equivalent of like a Dave Ramsey. She has a very conservative approach to personal finance. Really leans into saving, really leans into being debt free and making that the way to be. She has a very conservative investment approach where she's not about scale. She's not about leveraging risk. Yeah, she's very like slow and steady, kind of wins the race sort of thing. And just to be candid, I think that methodology has worked traditionally, but we've reached a space where the economy is a lot different than what it used to be. And although some traditionalist concepts work well, I think that people like Dave Ramsey, people like Susie Orman, I think that their methodologies are for a different economic time, and the economic times that we're facing presently require some differing mindsets around traditional thoughts, namely debt, leverage, and things like that.
Okay.
Scale, I think, is only achieved through leverage in 2025, with the cost of living being where it is, with salaries and incomes kind of stagnating and being where they are. Consumers have had to, and families have had to kind of resort to creative alternatives to try to augment their income. So dual incomes, triple incomes, four incomes, where a husband and a wife might have both side hustles where they're creating additional income. Investment strategies have shifted. Cryptocurrency is another asset class that wasn't there when Susie Orman was, really cutting her teeth. So all this to say, I think that she has a traditionalist mindset. She's still very well respected. But, I probably gather I don't necessarily agree with everything she says.
Got it.
So I don't know if that tees her up well or
that tees her up
a little bit.
more than well. That's perfect. It's teed up. So now I need you to just cut the tee out right from under.
All right. So in essence, her recommendation here is for homeowners to wait to the end of the year to kind of see how the market plays out. And I think that that's kind of an inferior methodology. I think, number one, if you're interested in becoming a homeowner in 2025, you got to know where your current economic stance is, right? You know your personal economy and how that personal economy relates to the macro economy. I think too many people are looking to the macro economy and making decisions based on things that are kind of out of their control. If you have a housing need and you need more space for your family, or you need to get to a better area for a different school district, or need an office because you're working remote, or whatever your home ownership needs are, the cost of living is projected to continue to appreciate over time. So I think locking in the cost of the asset at a lower cost is a superior method than waiting. The other thing is we talk a lot about supply and demand, right? So in times past, we've had a massive surge of demand and a low inventory, which has produced rapid appreciation. If rates move in a meaningful way and home ownership becomes more affordable to the masses, you're gonna have a bigger buyer pool coming to the marketplace. It's going to create a bidding situation. I'm kind of a fan of the methodology. Rates are going to change. So if you can lock into a property at a lower asset value, or potentially get into that house with less money out of pocket by getting seller credit or things like that, it could set you up for a better, long-term finance solution, because you bought the asset low, and in a year, 2 years, when rates get to where we hope they're going to go in the 5s or 4s, refinance then, but then you have market appreciation that's kind of working in your favor. I did a thing called the cost of waiting analysis on a home in San Antonio for roughly $450,000. And, based on that cost of waiting, by just waiting from, right now it's February of 2025, by waiting until September, that same property, based on appreciation in that area of roughly 4%, which is kind of modest, that same house is going to be almost $9,000 more expensive by the end of the year. So are you really saving money is kind of the thing. So I disagree with Susie here. I think she missed it. And I think that she might have a little bit of a myopic view of home finance in 2025.
Alex.
Yeah, Susie Orman. Yeah, I've known who she was for a long time. My mom's been a big fan. My dad's been an entrepreneur for a long time. My mom she was stay-at-home mom, but my mom was really, really into Tony Robbins. She got me into that when I was a young kid. And Susie Orman, like finances, right? So I've always known who she was. She's had her books. She'd read them. And, they would, my parents, my mom would follow that and give advice. I think she's great. I don't agree with everything. Again, with the whole Dave Ramsey, I was looking at both of them. I think Susie Orman might have a higher net worth than Dave Ramsey. I'm not sure. I was doing research. I don't know how accurate it is, but it seems like her net worth is a lot more. So kind of gives you an idea how big she is, as in, how wealthy she is. But
I feel really left out. I must be.
You're going to start reading your books now.
The brokenness in me, I guess.
But I agree too. I think she missed this. I mean, here's the thing. If you can't just guess, if she's saying wait till September, let's say you had 100 people in a pool to buy a house, and all 100 people agreed, hey, we're going to wait till September to buy in the community, and they all waited to buy till September. That's going to flood the market. And what is that going to do? That's going to create a multiple offer on homes. It's going to drive up the price, and you get in a situation like COVID, that was an anomaly year or anomaly years, but that would potentially do that. I mean, chances of that happening very slim, but if that was the case, everyone waited, you'd see real estate start jumping up, because it'll be a bidding war. Opportunity costs. I mean, just like Nathan was saying, if you're waiting, you see a house for $700,000 right now. If you wait to buy in September, that house for $700,000 right now is going to be more expensive. So that means you're financing more, you're paying more in property tax, you're paying more in homeowners insurance. Everything is going to be much more expensive. Yeah, maybe you did save more money, but now you lost that equity. And I agree 100%. Take advantage right now, and then you refinance it to a lower rate. I know, people, I was posting some stuff on social media, and people are like, oh yeah, of course, loan officer is going to say it's a great time to buy. Well, yeah. I mean, if you would have bought 5 years ago, wouldn't you be happy about 5 years ago? Of course. If you bought a year ago, you'd be happy. If you bought a month ago, you don't know. But wait a year, you're gonna be very happy that you purchased a property. And don't wait. It doesn't make any sense. I mean, there's a lot of factors that come into play. So again, I think this is just for news. I don't know if it's that term that we use, predatory marketing, or trying to get attention for these articles. But Susie Orman is a big name. I don't know. She's not as big as Dave Ramsey right now, but it could be a way of her getting back in. I have seen her name a little bit more recently, but yeah, if you're ready to buy and you have the money, you're prepared, you've already gone through consultation, buy property. Don't wait. It's not going to be worth it. You're going to be pretty pissed off if you wait till September, because how do you know rates they'll improve? What if they get worse? You don't know. But if you get the property now, you're in the home and you're okay with that rate and okay with that payment. Yeah. Just wait it out till rates go down.
I'll share this. I mean, I think, the cost of waiting, it all comes down to dollars and cents, right? So I kind of shared a big macro, like, hey, if you wait till September, the house is roughly $9,000 more expensive based on a 4% appreciation. But just to kind of give you some dollars and cents, if you were to buy today on an FHA loan for that $450,000 house that I talked about in San Antonio, Texas, right? And that's kind of I would say upper end property in that community, right? 450K. That monthly payment for an FHA loan with 3.5% down is $37.95 right now. If you were to wait 6 months with that house being more expensive, but getting a 0.5% lower interest rate and the market moving by 0.5% between now and then, I just don't see that that's very viable. But let's say that happened. That payment goes to $37.07. So that's roughly an $88 per month savings in your monthly expense. That said, your taxes, your mortgage insurance, your property insurance, all are more expensive because the cost of the property was more expensive. So all those things mitigate your savings a little bit. So it's $88 savings to wait 9 months. If you were to wait a full year, it's not $9,000 in overall equity appreciation you're going to save. It's like $15,000 between now and next year. $15,000 is a big amount of equity. That monthly savings that monthly payment, if you were to wait for rates to get down to 5.25 and 5.25 for an FHA loan by next year, I don't know. I don't see that happening that quickly. But let's say it did, that payment's $36.19. So in essence, it's like $170 per month by doing something right now versus next year. Now, where this tool is kind of inferior and where I think the analysis sometimes comes up short is it doesn't show you that if you bought it today and refinanced at that 5.25, if we got there in a year and a half or a year, it doesn't show you what that savings would be. Now, there are costs associated with refinancing. So I don't want to sit here and pretend that like that $15,000 in savings is all there. Like the cost of refinance is a couple $1,000. So your savings might be $13,000 in total. But at the end of the day, when you become a homeowner, your goal is two things. Let's fix our housing costs so we know exactly what our housing cost is from month to month. And let's secure an asset that is going to position us for the future. By buying now, capitalizing on the market as it is now with homes sitting longer, getting a deal, negotiating credits, things like that, getting in with less money out of pocket, you can capitalize on that, get the house at a lesser price. And as appreciation continues, it's going to be a better asset for you in the long run. You can always adjust your financing. Sure, it cuts into your margin a little bit, but it's usually negligible. And if you have an asset for a long period of time, buy low, sell high, it's just going to position you for future endeavors in a much stronger place.
One more thing that we didn't talk about, and I just thought, when you're mentioning this, I realized is the tax benefits. That's the number one thing we always talk about. Tax benefits are huge. So if you were to, let's say you're to close today, compared to closing in September, you're going to have that much more in mortgage interest. So that helps you for your taxes. Actually, I am a licensed tax professional, so I can't talk about this. So you have the tax benefits for your mortgage interest and property taxes. So you've built that up over the years. So when it comes down to getting your tax return, depending on your income or whatever tax bracket you're in and other write-offs you have, you would potentially get more back on your tax return. So if you're getting a couple $1,000s before not owning a house, or maybe you're owing money, that's going to change. It's going to flip. So another thing, you need to talk to a tax advisor. Don't go to like an H&R Block. Don't go to a person that does your taxes. Speak to a tax advisor, because if you own property, it's going to be your first home, for example. You're going to make up for it on the tax benefits. That's huge. And that's what they're missing too on this.
And I think just to bring it back full circle to the very front, at the very beginning, I said it's very important for you to know your personal economic situation. What does your personal economy look like in contrast to the macro economy? I think it's easy to look at headlines. It's easy to look at articles, listen to podcasts, listen to people like Susie Orman or Dave Ramsey, and take them as advisors in your world. But you got to look at your personal situation and determine, hey, do I need the tax advantages? Do I need the stability in my housing situation? Like, look at your personal economy and make a decision from there. And then, partner with a professional that can guide you through the process and ensure that the timing works well for your family. I'm not saying you go do this tomorrow, but have a plan in place and kind of know what your future is going to look like, and just be ready to execute when the time is right.
Yeah. And people like Susie Orman, Dave Ramsey, a lot of people love them. I'm not saying they're not good to listen to or read their books. They're great. I mean, if you want to get their books, you want to read their information, do it, because at least you're going to start somewhere and you're understanding personal finance. That's
Hey man,
one.
I've been through Financial Peace University at my church, man. I've done the Dave Ramsey
awesome.
thing, and it's outstanding. I think that as a baseline economic model, it's brilliant for a person that doesn't know anything about personal finance. But you have to position yourself to understand that, hey, once I kind of achieve some of these things in Dave Ramsey's steps, at a certain point, I have to graduate from that methodology. And if I desire to scale my personal economy and grow and build wealth and do these various things, I got to start incorporating other concepts that are more relevant to the time.
Right.
Oh, there you go.
Let's move.
Then become a
Let's move on
capitalist.
to our next story here. We have.
I geek out on this stuff, bro.
Yeah, I know you
Yeah.
do. See, I told you. You see, guys, I thought Nathan wasn't going to rant today, and then he did. So
Had some coffee before we jumped on, bro. Let's ride.
we got him going.
Let's
So,
go. Let's go.
I want to jump over to. We're gonna jump over to what's going on over in your guys' hood.
Oh yeah.
Yeah. So, State Farm requested an emergency 22% increase in California insurance premiums following significant wildfire claims, arguing that the state's insurance pricing does not align with increased risks. Critics, however, question the necessity of the hike, pointing out that State Farm has been profitable in California and should use standard procedures for rate adjustments rather than emergency measures. Just to kind of be brief on that, as far as what the standard measures are. Under California's Proposition 103, insurers must file a rate change request with the CDI for approval, provide justification for the rate change, and then they also have to wait for that to be reviewed. So if there is no hearing, it can take 60 days. If there is a hearing, it can take 180 days, and it's a public hearing that is required. And then they allow the public input if the increase is significant or contested. So what are you guys' thoughts? This is your hood. This is your guys' backyard.
I mean, we've been talking about this since we announced the fires. We had a special presentation, emergency podcast a few weeks ago when the fires were kind of going down. It's just tragic, first and foremost. Like, I think that now that the dust has settled and now that the fires have been contained and now that, rebuilding is underway, this is the start to a laborious process in getting things back on track. Now, I think we talked about this before, and the fact that we're all going to shoulder the cost of these fires. Now, we talk about the fires. This is our backyard. I live in Southern California. Alex lives in Southern California. This is just right on the other side of the hill from where Alex lives. So this is a little bit more, I guess, in our day-to-day operation that we're navigating through. Yeah. But there's devastation across the country now. You got places like Florida and the Carolinas that have experienced hurricanes and mass devastation. They're still rebuilding in parts of Houston from the floods that happened just a few years ago. So all of these natural disasters are creating a little bit of a challenge for these insurance companies that have had, California mandates insurance to be much less expensive than the actual rebuild costs. Now, I'm a State Farm member. I have insurance with State Farm for my properties, and I've expected this to come down the pipe. I guessed it was going to be like 33%. And this is actually a little bit of relief that it's less than what I thought it was going to be. But with that said, I think that this is the start to other insurance companies doing the same. I read that like 60% of the devastation that occurred in both the Eaton fire and the Palisades fire were insured by State Farm. So they're the first to react, probably because they had the most loss in that area. These insurance companies, this is just the start, though. There's going to be a lot of increases in insurance costs across the country. And this is the first company and to probably trickle the dominoes for other companies to follow in suit. And I think we're going to likely see this. And, as insurance costs go up, we're going to see additional challenges for inflation with the CPI and housing cost metrics, and additional costs with inflation and the cost of living and property values going up. And all those things are going to be inhibited by the cost of insurance, but I think this is the dominoes that starts it.
Yeah, I think that, this is what's going to start it. There's, what is it? Looking at the numbers, 8,700 claims. They've already received $1 billion in payout already. So I don't know how, that's what it says. I don't know if it's already processed through, but that's what they're already claiming. Here's the one thing is we're saying insurance costs 22% increase. If you're paying, let's say, $200 a month on homeowners insurance right now, so $2,400 a year, 22% increase is like what? Just over $500, right? So, it doesn't seem like a lot, but that's
annual increase. It's not like every
annual increase
every month, $500. It's annually.
That's an annual increase. Yeah. So,
right. So
it's
like
an annual increase.
That's just less than $60. So it's like $50, $55, or $54 a month, something like that increase, right?
Yeah. It doesn't seem like a lot, but that does cut into people's budgets when it comes to qualifying or being able to afford a home, and people that are in a position where they're already in a tight spot. This could really impact them quite a bit. What is it? The average person that goes through bankruptcy, I think it's like $500 a month of income, which, you know, you're dipping
That's a great
into,
point.
yeah, you're dipping into like that $500 potentially, or it could be even less than that now, because a lot of people, I mean, the credit card debt's through the roof right now. But yeah, I mean, I think this is going to impact people. But also on the other side, on the argument, we're kind of, let's say, supporting it also, is this, do they need this? Because the article says they want to avoid a dire situation. So what does that mean? Are they going to go, I mean, they're going to run out of money? Are they going to have to lay off people? What is it that they mean? I didn't get into this, but
That's a
this
really
is
great
something where,
point, Alex.
yeah.
I actually had I don't want to say an interview, but there's a State Farm agent that I know personally that I had a conversation with a couple of weeks ago. I shared a little bit about that discussion here, but something that he mentioned that I hadn't really considered is that State Farm is a private company. They're not a publicly traded entity like some of the other large insurance outlets. Because they're a private company, they don't have to report their profitability or the health of their financials. So, you know, all that to say, these moves that they're trying to make, or initiatives rather, to try to increase costs and things like that, and just saying like, hey, we want to avoid some peril within this company, they insure a lot of people. I do think that, you know, these claims could put a company like this belly up if they don't get the necessary support, and that could leave a lot more people exposed to not having insurance. That could lead to price gouging from other entities, because all these people are going to be without insurance. That could be an opportunity. So there's a lot that needs to happen here. My hope is that our government does the right thing. I hope that California works and streamlines this process, just because of the situation that we're in. We are in a state of emergency around those areas. So my hope is that this initiative can move forward quickly. And yeah, I mean, it sucks. I'm going to pay more every month and every year for my homeowner's insurance, and other people will as well. But you know, it's less than what I think would be necessary. And I'm hoping that, you know, this is something that we can curtail and you know, fix into our budgets. I think, Alex, you make a great point, and it goes back to my previous segment comment around understanding your personal economy. You know, with credit card debt and the surging cost of living and all the things that people are needing to do, it's really important for you to have if you are a homeowner already, or you're not a homeowner, equity is oftentimes the answer to a lot of these financial challenges and these issues, whether it's leveraging equity to create more income through adding an ADU on your property, or buying an investment property, or doing various things with your equity. Having a plan for that equity is more important than ever, because it can help you get out of debt. It can help you create more income. But if it's just sitting there locked into your 2.75 rate because you feel good about your housing payment, you're losing money in every other part of your budget without even realizing it. So have an equity plan, understand your personal economic situation. If you don't, get with a guy like us so we can help you sort through it.
Yeah. You know, I'm a State Farm member as well. And here's one thing about State Farm. A few years back, we thought about changing our insurance companies, right? Went to all these other companies. They said no, because everyone was dropping out, right? And State Farm, we already had them. They said, hey, I talked to the agents, like, we're not going to go anywhere. We're gonna keep you as a customer. We want to take care of you, and they've been good. They've been good. So and this has been the story I've heard from other people regarding State Farm in my area. So if State Farm was to leave and let's say they stop insuring people, that's going to be tough on a lot of customers. But also going back to where you're saying your personal financial situation, and going back to the other article, if you buy property, let's say now, fast forward many years, right? I've been in my home for 9 years now. The amount I bought my home for, it's less. I bought it for less than half than what it's worth right now. And I mean, even with the insurance costs going up, yeah, it does suck. I'm not happy about it, but because I bought then and I've been able to refinance, get a lower rate, that going up doesn't impact me as much as it does somebody else, because I bought my home years ago and I got a payment locked in.
Your housing cost is essentially fixed. So
Yeah,
even when you see a movement
fixed.
of $50 in your insurance, it's negligible to your bottom line in your housing budget, because you have a fixed asset cost. And that's exactly my point. So yeah, just I think it comes down again to your personal financial situation.
I like that. Y'all
Let's go to the next
y'all
story,
heard, man.
guys.
I was like, you guys have that conversation. I'm gonna sit over here in Texas. I'm gonna mind my business.
You know what? There's going to be a lot going on in California with all these fires and these
I know.
construction. Oh yeah. I already have buddies that are
big opportunity for construction
contractors.
guys, man.
They're already going in. They're assessing the damages, and they're going to start building. Yeah.
I have a friend that runs a home restoration company, private, not a Serve Pro or one of those, you know, big franchise companies. He runs an independent company that's a restoration company. It's my understanding that think it was like 2 Saturdays ago. He went out there and they had like a lot. The FEMA tent was set up in one area, and then across from it, adjacent, there was like an area for contractors and people to come out to start getting things underway with renovations and whatnot. They signed $8 million in work on a Saturday in 4 hours.
Yeah,
there's a lot of work out there.
That's crazy. Let's jump over to what's going on with our new president and his borders are.
Housing Wire? Oh, not that one.
No, President Bordazar. Let's talk about what mass deportations mean for housing costs. So mass deportation for undocumented immigrants, as proposed by the Trump administration, could lead to higher housing costs by reducing the construction workforce. According to University of Utah study, the research shows that increased immigration enforcement significantly slows residential construction, leading to fewer new homes and thus higher prices for existing housing. Additionally, the study suggests that these deportations might not increase job opportunities for U.S. citizens as expected, since many vacated low-skill positions in construction remain unfilled. What are your thoughts, Alex?
Yeah, we were talking about this briefly
your article too.
Before the pod. Yeah, we're talking about this briefly before the pod, and it's one of these things. This is a very sensitive subject for a lot of people, and me being Mexican or first generation, this is something where people that have a different view than me, they'll go after me, and that's just I expect that, and that's totally fine. I get it. Whatever your opinions are, cool, and I'll support you. Just support my opinion too. Here's the thing: if you come across illegally, okay, and you're a criminal and you commit serious crimes, if you get deported, that's on your fault. And splitting families, here's the thing: when that comes to that, you've already committed a crime. You did this to yourself, and you broke your own family up. So it wasn't the country; it was you doing that from committing a crime. And they're saying with all these deportations happening, how it's going to impact the workforce. And we touched on this a little bit. Who's a real criminal when it comes down to this? Because if they're saying they're gonna have less people building, right? So if you're deporting illegal immigrants, that means they're illegally working, right? They don't have a work visa, so that means there's a good chance some people that do file taxes, they with an I-10, maybe they're not legal, but they will file taxes and they pay taxes, and that is awesome. Even if they are supporting the country of paying their taxes and paying their half, great. But there's a lot of people that don't. So if you're a builder and you hire these people and they're not paying taxes, you're paying them under the table, check or cash or whatever. Who's a real criminal here? It's tax evasion. So you're evading taxes. So what's the big problem here? So when you think about them doing this, what is it? It's impacting the builder because they're not able to pay taxes. So who do they really need to look at? I mean, who they really have to look at these builders to see if they're paying their fair share too. So
IRS wants their money, bro.
IRS wants money, and we said this. What is it? Al Capone. That's how he got busted, through the IRS. They got him. Not saying all these guys are Al Capone, but that it just gives you an idea how serious IRS, and they will find you. You want to find a criminal? People always say the joke: if you want to find a criminal, see where they're at, have the IRS look for them, and they'll find them right away. So that is one thing right there when it comes to these deportees and impacting housing. And if housing going up in price too, it's going to increase. But come on, there's other crimes going on here, and these are these builders hiring these people.
Yeah, it's a discussion point that I haven't really heard talked about, especially in mainstream. I was curious about this. This is something that I'm not incredibly versed on, but the whole deportation, situation and the discussion around how it's going to impact housing specifically. I think that, first of all, who's being deported? So I did some research, and getting like raw numbers, actual or factual numbers that have been reported has been kind of hard. We had an article from NBC where I'd looked at it, and I found a number that was like 8,000 people have been deported since Inauguration Day, which is quite a bit for such a short period of time. But 8,000 people across the United States, like I don't know how many more people are on the docket to get deported, but
you may bring that up.
I don't know if you can find those numbers. I looked earlier today and I couldn't really find like an accurate representation.
Oh, I thought you meant the article. I have the article.
Yeah, there's an article that I'd referenced, but
yeah.
In this article, I thought it communicated it well. It was one of the better articles I could find around this particular topic. But like in the last couple of sections, it talks about how ICE policy prioritizes immigrants deemed to public safety threats for detention and allows officers use their discretion when they decide to release migrants who do not have serious criminal convictions. So the dialogue indicates that they're prioritizing the deportation of criminals and people that have, created, have imposed crimes or things like that. So I don't know. I don't think that deportation of those types of people is necessarily a bad thing. And then furthermore, this segment is specific around the housing costs. 8,000 people from, the workforce. I don't know that that's going to negatively or adversely affect construction in the way that it's being presented by some of these people. And then Alex, to your point, I mean, I've been around. I've been around flips and projects and contractors that employ non-documented laborers. This article indicates that a lot of those people were, quote, unskilled workers. I would argue that point. I've seen some undocumented guys that are the most skilled guys in the room.
Oh yeah.
Guys that are amazing at hanging drywall, guys that are amazing at doing countertop installs or renovating homes. Some of these guys are the most skilled in the room. Even guys that work for unions don't have the work ethic or craftsmanship that a lot of these non-documented guys do. But with that said, like, I hadn't really thought about the idea that, those that are employing them are also committing crimes. So tax evasion, things like that. So I think it's a really complicated situation. My stance is if people are criminals, they should probably be in jail, or if they're not from here and they're non-documented, it's probably not a bad thing to get criminals out of our country. And I don't think it's specific to just Mexicans. I know LA shut down the other day on the 101 freeway because of this big thing, because
crazy.
Mexico and all these things. But there's criminals all over the world that are here in the United States that are a part of these deportation endeavors, right? There's people from Europe, there's people from the Middle East, people from India. Like I'm seeing that this is a broad scope project now. It's early, and I think that as things continue to unfold, we'll be able to have a stronger opinion about it. But I don't know, man. I think it's going to be a drop in the bucket when it comes to housing costs.
Yeah, I agree too. Drop in the bucket. And one of those things, it's like, as in, support of my people, Mexican people. My dad's a proud Mexican. I am a proud Mexican. And my grandfather's probably the most proud Mexican.
Bro. I'm Mexican too.
I'm Mexican 3.
Mexican.
I am. You don't believe me?
And that's my first language. Spanish
Alex doesn't believe
language.
Me. He's like, yeah, no, you're not.
Hey, man,
eating tacos doesn't count, Josh.
I am. No, I'm dead serious. My mom is Mexican, Puerto Rican, and Cuban.
There we go. So he's got a little bit in him.
I'm gonna check with your lady, bro.
And my wife just bought me tostadas just now. So
okay, got you.
You said it right, tostadas. There you go, man. Yeah, but that's my first language, and here's I support my Mexican people, and
now I'm going to
any immigrants, right? People, because here's the thing, my grandparents came here. They came here legally too. They didn't come here illegal. They came here legally, and they built something really great, or built businesses and has successful businesses, and taught us great values. My dad and brought them all the way down to us. And that's one of the reasons why I'm an entrepreneur, because that's one thing that's ingrained. I'm going to say Mexican culture. I don't know about other immigrants, but that's ingrained in us, just working hard, just having that culture, just working hard and just just being together, like having a family, having friends. Right. And the one thing, not low skilled, I think they're very skilled people. And they're great. I've been in builds. I've been when working on my house, and some of these guys that they're amazing. Right. And here's one thing that I've had clients that they're not legal immigrants, right? They've been here for years. There was a client I was talking to 2 weeks ago. They've been here for 20 plus years. They've been filing taxes for 20 years. They use an I-10. They're not legal, but they have a business. They've been filing taxes for 20 years. They've been paying their fair share. People, and they're not criminals. Those people should not be deported. Those people should be giving a chance. Hey, they're contributing, and they're contributing. They should be put on the fast track. The immigration system needs to be fixed. They need to be put on the fast track to become legal, right? To become legal. The ones that are criminals, that's the problem I have. That's what we're talking about. That's where the problem that everybody has is, if you are somebody that hires somebody, if you own a company, you hire somebody that is illegal, but also they're criminal. Maybe you might not do that, but this is the reason why you hire somebody that is legal, but also you could do a background check. You get documentation to see who these people are. But it's if they're a criminal, violent criminal, out of here, man. But if they're illegal, but if they've been contributing, paying taxes, and they're good people, they need to have an opportunity to speak and also get on the fast track to become legal.
I think two things. One, we haven't made it easy as a country for people to become citizens. The citizenship process isn't easy. It's also very expensive. And if you
Yeah.
come here and you don't know how to go through that process, and we don't make it easily or readily accessible, and then there's attorneys that walk immigrants through that process that kind of gouge, because it's a very small niche market within the legal world.
Yeah.
It's hard, it's expensive. We don't make it necessarily easy. So I think there's that. So I think that ignorance around how that process works, and then the fact that the process isn't exactly easy or simple or streamlined, it makes it difficult. But we also made it really easy for people to operate within our economy, and the benefits of being undocumented are actually greater than being a citizen in a lot of cases, right? Like access to healthcare, childcare, public housing, public funds, like especially in places like the state of California. Being non-documented kind of has its perks. So I think
They
that
turned a blind eye. They turned a blind eye. That's what it is. And it's just one
yeah,
of those
and I mean,
things.
so
Yeah.
this is a loaded segment. This is, the more I talk, the more I'll probably get myself in trouble. But I just think that, we need to just let things continue to unfold before we
This
see how
is
it
the
goes.
real
But
take
specific to
political
housing,
podcast.
I think that
Real
specific to
political
housing,
take.
it's gonna be a marginal impact, at least for now.
Yeah.
Let's jump over to what's
Let's
going on
go.
in rates. Let's jump over to what's going on in rates. So realtor.com says mortgage rates decreased to 6.89% following President Trump's decision to suspend proposed tariffs on Canada and Mexico, which had initially caused market uncertainty. This drop came as a relief after rates had hovered near 7% since the year's start, with the financial markets responding positively to the tariff suspension due to fears of inflation. Despite the slight decline, high mortgage rates combined with softening home prices and increasing housing supply and creating a more buyer-friendly market, though affordability remains a challenge. Nathan, what do you think about rates, bro? Because this is right up your time to geek out on charts. You want your rates?
Yeah, I mean, we can go there. Rates have been pretty flat, and yes, we talked about this a couple of weeks ago about the tariffs and the cost of home ownership and inflation, and how some of the tariffs were counter-inflationary type initiatives. We saw here, I think Alex was the one that pointed, or maybe you, Josh, pointed out that like maybe this is Trump trying to use the art of the deal to get people to the 100%. Table. And it obviously that played out. That's how it looks here, right? They reversed course on those tariffs, which obviously is going to stabilize some economic certainty from investors and also consumers. So all that to say, art of the deal, it worked. They got them to the table, and it's panned out. Now rates have been somewhat flat. I mean, moving by 0.1% is pretty nominal. We saw rates at 7%. I think today's national average was 7%. I think yesterday, the day before, 7% today. Yesterday, the day before, was at 6.89 when that article was published. So it was very, very modest, but we've been really, really flat. And, I say it over and over. It's the Fed Treasury's comments are really, really important. The jobs report, there's another jobs report coming out tomorrow, and the inflation report of CPI. Those things are really what are kind of leading the bond market, and the bond market is ultimately leading the rates. It's been a really, really stale month when it comes to those performances. The Fed said a whole lot of nothing a couple of weeks ago in their last meeting. The bond has been pretty flat, more or less, and we've seen mortgage rates kind of plateau. My thought is still kind of the same. I think that we need some more bullish or hawkish comments from the Fed, giving us some indication of what their policy is going to be into 2025. I think there needs to be an allocation of funds to purchase mortgage-backed securities in a meaningful way to lower the cost of bonds, and or make the bonds perform better rather, and make the cost of money more affordable in the mortgage world. And then the Fed Treasury lowering those rates is going to make consumer rates less expensive for credit cards, home equity lines of credit, auto loans, and things like that are kind of attached to the Fed Treasury rate. Those things together are going to make the cost of money less expensive across the whole thing and across the whole economy. And I think that those initiatives are going to drive down inflation in a lot of ways. So, I'm of the belief that by summer we could probably see conventional rates in the mid sixes. That's where I'm hoping we get to. FHA and VA loan rates, I'm hoping we get into the low sixes, potentially like the really high fives. And by next year, I'm really hoping we see something in the mid sixes for conventional loans. I feel like that's kind of optimistic. There's a lot of economic things that have to happen between now and then for that to occur. But I'm optimistic and I'm hopeful. I still think the market is providing opportunities for people that want to enter it. So if you're on the fence for housing, rates are kind of what they are right now. They're in the sevens, low sevens, high sixes. capitalize on that opportunity, but leverage other opportunities with lender credits or seller credits rather, negotiating discounts on houses with seller credits. We have all kinds of stories where we've negotiated clients to get all their debt paid from a seller credit, buy their interest rate down, and get into that house with next to no money out of pocket. We did a triplex like that in San Diego where a client got a new roof, a renovation, got their debt paid off, and came out of pocket for like a couple $1,000 to get into a house with a VA loan. So those deals are out there. You just got to work with a team that can advocate and help make that happen and capitalize on this market.
Yeah, those are great deals right there. When you hear about those, that's awesome.
They're all over, man.
Oh yeah. I was going to ask you. So, do you think? So, when it comes to rates, you know, when we hear the word flat, rates are a little flat. It almost sounds, I guess, somebody that's watching this that doesn't really understand. I guess if I was watching this, I'd be like, oh, that sounds disappointing. For me as a loan officer, that actually gets me a little excited. I'm a little happy. I'm okay with having flat rates instead of it being crazy. Like, you know,
constant ebbs and flows are crazy.
Yeah, constant ebbs and flows. When it's like that, you're like, you don't know what to expect. Oh man, this week, you know, rates jump up so much and then we're back down. So I'm okay with them being flat. That I'm okay. It's because of this way, when it's flat, it's when you're talking to a customer, when you're doing a consultation, you know, when you give a quote and then the following week it's very similar, it gives them a little more confidence, because then although we are educated and we explain to them what could potentially happen, we can tell them everything, right? But and they can trust you. But then when it's flat and they see rates are flat, I think for the consumer, they're a little more like, okay, you know what, I'm gonna jump in and buy. That's one thing I was telling the client. I did a consultation last Friday, explained to him, I let him know rates have been a little flat. And I'm all, when do you want to wait? He's like, I was thinking I want to wait till September. And I didn't, and when I think about it, he
read Susie Orman's article.
It's possible he read that. And I explained to him, like, yeah, you can. And I explained to him, you know, the type of market you'll get into, but the cost of him waiting. And he completed his application yesterday. We got him pre-approved, and he's going to search for houses this weekend. He's ready to jump in because he's like, you know what? I think this is the time. Rates are where they're at. I'm just refinance later. I'm good. He's going to put a ton of money down. Very well qualified. So anyways, I don't know what your take is on that. Do you feel better about rates when you hear like, hey, the rates are flat?
Absolutely. So when I say that mortgage rates are flat, it is a non-technical term to indicate that there is some stability and consistency in the marketplace. When we're experiencing volatile interest rates, that means we have these big peaks and these big valleys. We had a period of time like that right around the election last year where literally from day to day, there were 25 and 30 basis points inflections in the marketplace that created a lot of volatility. So trying to predict more or less where the puck is going to go and what rates are going to be on a day-to-day basis during a highly volatile period, during a time of uncertainty like an election, it makes it hard to guide families. Now, right now, we're experiencing a flat line, which is basically, if you look at a chart, we say it's flat because it's been consistent, right? So we're experiencing a little bit of a flat line, but it shows stability in the marketplace. So you know more or less what the cost of money is going to look like. So when you get a payment quote, you can rest assured that that quote is going to be fairly consistent when you get into escrow, when you find that house, because the market is displaying a little bit of stability. Now, you know, stability at 7% or high sixes, I mean, that's not the most favorable for consumers, but it helps us understand, okay, if this is the cost of money and this is what payments are going to be, then we can do these other creative things to try to reduce that cost, reduce the cost out of pocket to become a homeowner, and do other creative things because we have some consistency of rates.
All right, guys, that was a great pod. That was good.
Alex is taking tonight.
Yeah, I'll take it from here, guys. But yeah, if you're watching, if you're a realtor or if you're a loan officer or your consumer just want to get more information, please like, subscribe, and send this to all your friends. Share it on your Instagram, share it on your YouTube, and make sure you come back. And we look forward to you guys watching again.
And before we go, really quick, we want to make a quick announcement. My boy Josh just tied the knot with his long-term fiance, that he's been with for a long time.
I was like, wait,
made it happen. They are married. So put your best marriage advice for Josh in the comments. It should be fun.
Please.
Congratulations to you and your family, man. I know this is a big win. This is something you've been working for a long time. Proud of you, bro. Got a lot of love for you. And nothing but blessings over you, your marriage, and everything you guys pursue together.
Thank you, guys. I appreciate you guys.
All love.
All right, guys.
Peace.